it's actually helped in balancing the crisis. Otherwise, you might have landed up with something far bigger, a lot more non-performing assets if you pumped in a lot of capital into the market.
That's hindsight, that probably a quality that only politicians are born with.
Yes.
But just to take a final remark from Mr. Sethi before we throw the house open for questions. Again, I'm just coming back to the point as a concluding remark from you. Based on all the interactions that you have, we all often hear complaints about how India compared to the rest of the countries is not conducive enough for investment. Maharashtra as a state is probably not conducive enough for investment as compared to the other states. What steps is the industry's body taking to ensure that the SMEs don't face so many hurdles?
No. When you're saying the future, well, I would say Maharashtra does attract the maximum investment in the country today. That's a fact. And when you say what is the government doing, the kind of incentives that are being given, I mentioned mega projects. The incentives that we give are industrial promotion subsidy to the extent of 100% of fixed capital investment, which is given through VAT and stamp duty exemption and the like. But I'm saying apart from the incentives given by the government, the future obviously lies in the fact that we need to work at the infrastructure. Power is one thing that everybody talks about, and it hurts the most, I understand. I've worked in the electricity sector, and for the entrepreneur, it hurts the most. No amount of incentives can help him if the power is not uninterrupted, if he's not getting the quality of power that he requires. But the future actually exists when we say skill development or the technology upgradation that Dr. Mitra mentioned.
Sure.
That is somewhere we have to come at par with others. That is the way to go. Today, we give incentive for technology upgradation, for patents, for quality manufacturing, but there are no takers, let me tell you. So this is something that we need to all highlight, that how only when we will be able to do that will we be at par with others, and we'll probably come out even better out of this kind of a crisis.
I'm sure the figures would suggest that as well. Many thanks, all of you. I'll throw the house open for questions. I'll have tons of them, but I'll probably allow the audience to ask a few. If we still have time, I'll probably pop in the questions myself. But anybody? Would request you to speak out your name and address the person that you're asking the question to. Please, the mic to the gentleman here. Right. I guess your voice will do it. We do have a mic. Yeah.
Myself, Hirawat. My question to Mr. Sethi. You touched little bit on stamp duty. You are well aware that Bombay is today the highest stamp duty state, and we all are forced to go to Silvassa, Delhi, other places. In the process, I don't know whether you are making money or not, but why? I mean, this looks so bad for a progressive state like Bombay, the highest stamp duty, and all of us have to go out of state. Can you do something for this?
Two things. One is, if we are talking about the units that we are talking here, the two schemes make sure that stamp duty is exempted. I mean, Mumbai and Pune mega projects, still the definition is 500 crores. But in the rest of Maharashtra, it's 250 crores. So if that is what we are talking about. But apart from that, various sectors, IT, textiles, we have policies on a lot of these sectors where stamp duty exemption comes as a part of it. Now the second part, when you say it is higher than the other states, there is some kind of a revision that we are talking about.
You talked about the stamp duty on the initial land registration. What I am talking that we have to mortgage our property to our lenders. And that time the stamp duty which we are supposed to pay is the highest in Bombay as compared to any other state. In fact, Delhi it is 250, Silvassa it is rupees 250, and here it comes in lakhs and millions. So
no,
that sort of
there is certainly
no exemption in that regard.
Very right, very right. This is certainly being considered. That's all I can say at this stage. Yeah.
Any further questions? And some of you can probably ask Roopa, what should you do in order to make your statements look better so that you can get better ratings as well? Nobody? Fair enough. Roopa?
I can actually comment on that, our observations.
Great. Lovely.
I think, when we started looking at the SME sector 3 or 4 years ago, we did face many more issues relating to transparency of reported numbers than we do today. It is very significant that 1/3 of companies who have gone in for a rating in the first year come back for a renewal in the rating. And the reason they do that is because they are getting a tangible benefit in the form of interest rate concessions from the bankers. 17 banks in the country today have announced interest rates linked to the ratings that these SMEs and SSI units get. So it makes a lot of sense for them to continue with the rating. In the process of continuing with the rating, what happens is they are also realizing that better quality of reporting actually helps inspire confidence in rating agencies and therefore get better ratings. And we are seeing that shift. Company after company that is coming back for a rating renewal, we can perceptibly see how the quality of their accounts have improved year after year. A lot of it also has to do with second-generation entrepreneurs taking over. I think there is a much higher buy-in amongst the younger generation in terms of presenting accounts which are clear, which are transparent, and which enable the lender or an independent assessment agency like CRISIL to take a view. We are seeing that trend, and it's a very positive trend.
Bankers people?
I think what we are also seeing is a much greater openness amongst our mid-size segment to respond to queries proactively. When it comes to their financials, when it comes to their operations. I think in the past we probably would have had a sense of concern as to why a certain question was being asked. But I think one of the big sort of shifts in behavior that we've seen is the proactiveness with which now companies want to come and share information about themselves. I think the other big shift that we've seen is that it's not about P&L anymore.
Sure.
It's not about profit and loss, because I think that's a very notional concept, a concept that to my mind is now less relevant than cash flow. So it's all about the balance sheet, it's about the indebtedness of the company, it's about the funds that are likely to be used in future and where they're going to come from. It's conversations around that are now becoming much more important, and corporates are paying a lot more focus to that aspect of their operations, because that was the one aspect that they found to be really troublesome, their ability to manage liquidity in the times of crisis. So I think that's now brought that issue, the crisis. One of the fallouts of the crisis is that's brought that issue in the forefront, and it's now being discussed much more transparently and therefore being tracked more proactively.
Surely. One more aspect that probably get a corporate's view as well, and that is, a general fear that we get from all the corporates that we interact, and that is the rising cost, the rising interest costs, and in all probability they will go up. Mr. Karia, to your business per se as well, how much of an impediment or a concern would it be if the interest rates go up by another 50 basis points or thereabouts, and you of course come in the bracket wherein it would impact you even more? Is it a really grave concern for you? Do you look at it with bated breath and say, hope the interest rates don't go up too much?
Personally, not for us, because the interest component is a very small part of our expenditure. But yes, for the industry, it's a matter of concern. And more than the interest cost, it's the accessibility to funds. That is the first part. The second is, India is a market where a lot of bad debts take place because of open credit.
Sure.
So I think just more than the interest, the banks have to work out something like they have in the foreign countries, where they take over your debt or they take over your funds management, and we've been speaking to quite a few of the banks. So I think a lot more for the SMEs, for the MEs as well as the large corporates, there would have to be some kind of betterment in the product range that is offered. Then I think the companies would be able to, because if you're having say maybe a 1% write-off due to bad debts and you have a increase in interest cost by say 100 basis points or 200 basis points, then I think the first would be more preferred.